Okay, let's take a look at the specific two different methods. We'll be talking about percent of sales first. So there are two ways to estimate uncollectibles. One is very straightforward, which is based the percentage on the total dollar amount of sales that we make to customer. And here the sales, we're only referring to the sales on credit, so not the cash sales, because cash sales readily are collected by cash immediately when that transaction happens. So percent of sales will be estimating a portion of uncollectibles based on the total sales that you made on accounts receivables. So meaning that if the total accounts receivables sales that you make this month, let's say were $20,000, and based on past experience, you may have 1% of these that the company would not collect from customer based on estimation, then the total uncollectibles would be 1% of these, which is $200. The dollar amount later on that falls into the entry would be a percentage of estimated uncollectibles times the total credit sales. This is the first method, the core idea of this, percent of sales. We usually call this method also the income statement approach, just because sales revenue appears on income statement. We're basing estimation by sales revenue, so we call this income statement approach. Okay, another method here is called aging of accounts. Aging of accounts means that company would be categorizing accounts receivables by its age. So if earlier a transaction happened in January, then the age will be older than the transaction that happened in December, for example. Okay, so they will be slicing, categorizing accounts receivables, those subsidiary accounts as age, based on different categories, and they assume that the older the account gets, the more probability will be assigned to that account in terms of not collecting the money. Okay, so the older the accounts, the higher percentage, later on I will show a table, higher percentage of uncollectability will be assigning that dollar amount to that account. The younger the accounts receivables are, the less percentage, less probability that the accounts will not be collected, because it's still a new account. So some companies uses just one method of these. Some companies may use a combination of these two methods. Percent of sales typically is used on a monthly basis for a lot of the corporations. And aging of accounts, usually companies, if they use a combine of the two, they will only do this at the end of the year. They summarize all the accounts, receivables accounts, slice them into their age, and then use the aging of accounts to estimate the part that they may not be able to collect. Okay, so some companies use this one, some companies use a combination of these two methods.